If they're competing with the dollar, they're competing with something that grows at 7% a year, but is pretty fast and
Yeah.
usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and basically as fast as the dollar. And
Yeah.
that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Hey guys, welcome to Everyday Finance. The realization that ordinary people's wealth is disappearing in front of them, not through overt theft, but through the covert deterioration of purchasing power, is the tipping point for every financial crisis. The basics are now hardly covered by what used to fill your grocery cart. On paper, your bank balance may appear healthy, but in practice, it gets less and less each month. The fundamental problem is the same, whether you're in the United States, where inflation is concealed by complexity, or in a country like Egypt, where it's a daily struggle. Governments pumping newly created money into the system to fill budget gaps. According to monetary analyst Lyn Alden, the money supply is expanding by 20 to 30% a year in some regions. Not just inflation, but complete dilution. People had few choices for decades, and this silent tax has always been there. Even the classic lifeboat, gold, has its limitations. The majority of people still keep their savings in conventional accounts, which are still vulnerable to the procedures and regulations that subtly reduce their value. However, things have changed since then. Bitcoin is a monetary alternative that isn't regulated by any one state, doesn't inflate, and doesn't depend on faith in institutions. According to Lyn Alden, Bitcoin poses a serious threat to the system and is more than just a hedge. It's capped, digital, and quick. Unlike fiat, it doesn't deteriorate over time. Furthermore, Bitcoin has the potential to upend governments' long-standing power to manipulate currency in order to extract value if it grows even 10 times faster than it is now. Lyn explains in this compelling new video why traditional monetary tools are failing, why inflation is structural, and why Bitcoin may be the first real check on centralized monetary power in modern history.
I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but
Yeah.
basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlements.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar,
Yeah.
the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it.
Leading into it, yeah.
We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent,
Yeah.
but it still is basically Morse code.
Right.
Kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think we want it to succeed on the first try rather than have to kind of start this project all over again.
Yeah.
One thing I point out in that show was that when the car became popular and affordable enough for Americans to own at scale, it became a symbol of freedom because people could leave their city without really relying on anyone else. They didn't have to rely on these centralized systems. They could just get in their car and go. So that was like a symbol of freedom. And it's one of those things where some people to this day preserve that freedom tremendously. Like I had a former boss that literally would kind of rebuild his cars from scratch and knew how to fix every nut and bolt in them. And so he's about as
that's a don't trust verify.
Yeah, he's about as self-sovereign as you can get with vehicles.
Yeah.
Whereas other people will just lease their vehicle or just still use public transportation or whatever, and so they're fully reliant on the system. And the point is, you can kind of choose your own adventure along that path. Usually, we're all kind of shitcoiners in some aspect, whether it's food, whether it's transportation, there's some area that we're just not focused on.
Because we have to trust.
Yeah, because and so money is one of the more important ones that people probably should be paying attention to. But there's still going to be this spectrum of, there's going to be people that are power users.
Yeah.
That want to have as much kind of self-control and mastery of it as possible. There are other people that say, well, look, I'm comfortable in my jurisdiction. Maybe it's Switzerland, maybe it's Singapore, whatever the case. They're comfortable in their jurisdiction to say, I'm happy to have a custodian hold it for me.
Yeah.
I don't want to worry about it, or maybe I'm 70 years old and I don't want to lose my keys or risk it. Even though there are plenty of people of that age that can, but there are some people that just they have enough going on.
Sure.
And the whole point is there's kind of this spectrum of choose your own adventure, and it goes from full private self custody, do it yourself multi-sig, to collaborative custody, to fully custodial relationships. And I think that optionality is really important. So for me, I never really lose sleep over how many people are choosing to self-custody use it in the best way. It's more are we doing enough to make it so that as many people as want to be power users can? Because I never would want someone to want to be a power user and just they don't have the resources to do it.
Right.
Whereas I can't do anything about if someone just doesn't want to be a power user, they don't want to fix their own car, they don't want to have their own multi-sig Bitcoin setup or whatever the case may be, nothing I can do about that. I just want to make sure that anyone who wants to be self-sovereign can be. So it starts with the assumption that Bitcoin gets massive and really starts to actually meaningfully displace currency and bond markets. That's basically the question. If you look at some of those older European maps, they'd be a lot more fractured than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. For example, the full banking system is currently under every country's control. They can go around that. And they have a much harder prospect of raising capital. Because again, if Egyptians, going back to that point, 20 to 30% money supply growth is happening, and there's very few ways to opt out of it other than power users getting into Bitcoin. And even people that have gold stashed away, they still have bank accounts. There's always still some residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with. Because they're competing with before they were competing basically with gold, or smaller countries are competing with the dollar. And so they're competing with something. If it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Inflation is a fundamental flaw in modern economics, not just a bothersome side effect. The quiet disintegration of what money truly means, as explained by Lyn Alden, poses a greater threat than simply price increases. A hidden tax that penalizes savers, workers, and small businesses, while rewarding those closest to the printing press, is created when the money supply grows significantly faster than the rate of actual productivity in fiat systems. However, this goes beyond your monthly bills. It's about damaged incentives, a financial system that prioritizes manipulation over merit and eroded trust. Time horizons are shortened, contracts are weakened, and power is concentrated in the hands of a select few who control the currency as a result of inflation. The outcome is the same, whether there is a 7% increase in the money supply in the United States or a 30% increase in nations like Egypt. Value is diverted from those who generate it and given to those who invent money. In the past, the only way out was through gold. However, gold is cumbersome, slow, and still dependent on the banking institutions that undermine its usefulness. Now, Bitcoin, something essentially different, is starting to emerge. It has no borders, is quick, has a cap, and is not governed by a central authority. According to Lyn Alden, Bitcoin may be a reset button rather than merely a new asset class, an instrument for avoiding the inflationary treadmill. She explores why Bitcoin's architecture makes it particularly resistant to systemic devaluation in the following segment, as well as how it has the potential to empower people in ways that gold was never able to. You can't afford to miss this discussion if you're attempting to figure out where the world is going and how to safeguard yourself in the process.
And I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government,
Yeah.
but at least they generally know what they're getting into. It's like they're saying, like, part of why we run, my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever. Yeah. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so, and taxes are transparent. That's why if you go back to wars in the past, that's why even like older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system.
Yeah.
People revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you?
Yes.
And so then, different places are free to still kind of choose how they want to govern themselves. And there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option. This is a really big self-reinforcing network effect, which is why I think it still lasts quite a bit longer than maybe we'd hope for. But at the end of the day, it's still funded by bond markets. Propaganda starts to kind of diminish when the bond market is obviously failing.
This is happening now.
Yeah, and different parts of the world at different speeds. But people eventually lose faith in the thing that they were maybe previously had faith in, because when things seem reasonably stable, you're more likely to believe things that are not true, that are kind of shown to you.
Yeah.
Whereas when things around you are just not working well, you're more likely to question things.
Yeah.
I mean, that happened, the whole like Cold War. If people got a taste of, if they were in one of the less free parts of the world and they got a taste of what the outside world looks like, it's well, wait a second, I don't seem like I'm on the winning side right now.
Yeah, for sure.
Whereas if you didn't even know that outside world existed, how would you even know?
Nothing to compare it against.
Yeah, and so I think that as this plays out, that kind of self-referential microphone just gets weaker and weaker over time. And like right now, gold is kind of reasserting itself in the global central bank system. They're saying, look, I don't fully trust the dollar. Some of these countries are stacking gold. I think some of the smarter ones, usually smaller ones, some of the smarter ones are also stacking Bitcoin. So around the margins, they can talk all they want about how the treasury market's safe, but they're increasingly, institutional investors that are like, this fiscal train's not going to stop anytime soon. And there are central bankers saying this is not going to stop anytime soon. So that trust can still erode over time, and it just takes a while. it's crumbling, and also as that as that ledger gets more top heavy.
Yeah.
So as we've kind of built up, debt on the sovereign level, for example, people are more aware of the fact that sure, it's technically risk free unless they kind of choose to default on some
Yeah.
sort of technical grounds. But you're not free of debasement risk.
Yeah.
So if the risk-free rate, let's say that the treasury yields 4% and the money
Yes.
supply is growing at 7%, your actual rate is like -3% per year.
Yeah.
You're getting bled out,
Yeah.
and that's kind of like paying really high property taxes.
That is
for
a
example.
default.
Yeah, and then in history, this tends to happen kind of in bunches. So, for example, during the 1940s, they didn't default on their treasury bonds, but
Yeah.
they printed so many dollars, and they defaulted on all their prior like gold obligations. That happened in the 30s, and then it happened again in the 70s. Those are types of defaults.
Yeah. Yeah.
And basically, we see this around the world that when you get this lever, there's going to be a default. It's rarely going to be a nominal default in your own printable currency units, but instead it's a default in purchasing power. And particularly it's a default compared to the most scarce things.
Yeah.
So even if they manage to keep inflation somewhat on the rails for things like food and electronics and other kind of things that were way more productive at making, it's still a major default on anything of like truly scarce value that people want.
Yeah.
High energy stuff, good properties, gold, big oil, these types of things. Ability to fly comfortably, the best healthcare.
Yeah.
That is a default on those types of things.
Lyn Alden provides a convincing explanation of how inflation subtly alters society as a whole, rather than just affecting people's wallets. Inflation damages trust, warps incentives, and impairs future planning, in addition to driving up prices. The damage is immediate and catastrophic in nations like Egypt, where the money supply is growing by 20 to 30% a year. Businesses are unable to keep up, wages are falling behind, and even the most responsible individuals are losing ground. However, inflation is a global structural problem linked to the design of fiat systems, not just a local one. This is where Bitcoin comes into play. With a market value of more than $2 trillion, Bitcoin is no longer a fringe asset, but rather a viable substitute. It is a decentralized monetary system with a fixed supply, open regulations, and no central authority. It is more than just a hedge. According to Alden, this might severely restrict governments' capacity to extort money through covert inflation. Bitcoin could have a revolutionary impact on conventional monetary systems if its share of global M2 rises from 2% to even 5% or 10%. The rules of the game might change from discretion to discipline. Central banks would lose their power, and citizens might acquire new financial independence. This is a reset of trust, not just a change in technology. A shift towards systems in which people actually manage their finances, and where financial authority is not confined to private institutions. It's unclear if that change will fully materialize, but as Alden demonstrates, the momentum is already increasing.